Good morning. It's Monday, January 27th, about 6 a.m. Central Time. We got a lot to unpack, so let's get into it. A lot of volatility in the markets, a lot of event risk this week as well. So overnight, the precious metals, they are edging lower. This follows last week's $37 rise in gold prices, while silver ended the week essentially flat. Looking at the technicals, it was an inside week for silver in relation to the previous week, while gold extended its gains for the fourth straight week. That disconnect is what's driving gold faster than the price of silver, resulting in an almost 90-to-1 gold-silver ratio, which would be the highest level in 2025 and also 2024, retesting those highs. Now, something to note about last week's volume, it was incredibly light, meaning many traders moved to the sidelines in anticipation that President Trump would announce a series of tariffs specifically targeting China aggressively. That was not the case at all. And what happened was we saw many commodities, stock indices either reach new contract highs or all-time highs. Now, this week, we expect to see volume and volatility really rise with nearly a full week of earnings and economic data releases. Not to mention some of the overnight headlines we're seeing has really rattled the market. You're going to hear a lot about an AI app that's produced out of China called DeepSeek. It's a new model that raises questions about the dominance of U.S. tech companies like NVIDIA. They'll highlight NVIDIA is down over 10% as of this recording here and was down much more in the overnight session. So this news of this new AI app, it's caused a decline in global tech stocks, with the NASDAQ dropping as much as about 5% at one point overnight. As of this recording here, U.S. equities, the NASDAQ's down about 4%, the S&P 500 down about 2.5%. So DeepSeek's model, it's built using open source technology. It challenges the notion that China's AI technology is years behind. So it's the number one downloaded app in the App Store. And remember, it's innovation that really disrupts valuations and competition. What's happening is that this particular AI open source model is using technology and chips that are slower and also not as advanced as these chips that are in high demand out of NVIDIA, meaning that they can produce equally or the same amount utilizing less technology at the moment. So that's why you're seeing all the tech stocks, all the AI stocks, they're just getting slammed overnight. Now, you did see copper futures really back off at one point overnight, and it is recovering just a bit. It's the biggest sell-off in the metals complex right now. All these different commodities, everything is basically a sea of red at the moment here. But it was copper that sold off because of the fact that there are concerns about Chinese economic growth. We're seeing all the mining equities, they're down significantly overnight. It's the weak Chinese factory activity and profit data, as well as President Trump's tariffs on Colombia, that really contributed to the sell-off in copper and also the sentiment of the markets. Now, shifting on to the Colombian tariffs here, basically what happened was U.S. President Trump, he had threatened to impose tariffs on Colombia over these deported migrants. They turned away 2 planes, and then what happened was Trump slapped 25% tariffs. He also wants to repeal some of their passports and things like that for Colombian officials. Colombia backpedaled on everything else. So basically what's happening is that trade war was probably the fastest one that's ever been implemented and resolved. But it's more important to see that Trump is also using tariffs as a geopolitical type of threat. So that's why I believe we're seeing gold prices recover quite a bit. Not to mention that with the sell-off in the equity markets and the aggressiveness of the sell-off, we're probably going to see some of the expectations for the Fed to cut rates are going to rise pretty dramatically. So we're seeing gold, it's pairing its losses here. And the precious metal is definitely off of its lows because of the fact that you're seeing that the expectations, again, like I said, are rising that the Fed will start to cut rates. So this week, again, action-packed as far as data coming out. We've got consumer confidence on Tuesday. The Fed is meeting on Wednesday. They're not going to cut rates. If you go to the expectations on the CME's Fed Watch tool, it's like a 2.7% chance that the Fed cuts rates here at that meeting. So it's not going to happen. Now, what will end up happening is Jerome Powell will have his press conference, and then Trump will probably tweet saying that it was dumb for him not to cut rates and blah, blah, blah. We got to get these rates down right away. So we'll see what kind of pushback that is and if it has any implications as far as May, June, July, because you look at the expectations for these interest rate cuts. We've gone back up to 2 interest rate cuts this year, and I believe that's why gold futures are kind of hanging near those all-time highs and getting close to it. Now, shifting to the FX markets like the dollar, interest rates, and things like that, we are seeing 10-year treasury yields are backing off quite a bit here, down 10 basis points, sitting at about 4.5. So you're seeing the 10-year note up about 27 points. The dollar index just slightly weaker here. The British pound, the euro currency, and the Japanese yen are all rising, as well as the Swiss franc, putting pressure on that dollar index at the moment here. Now, the dollar index is at 2 straight weeks of declines, with last week's very sharp sell-off, about 1.75%. If you factor in today's sell-off here, so we're down about 2% in a week. I believe that the dollar, and many other analysts so agree with this, that the dollar's downside is limited because the Fed won't aggressively cut rates and the labor market's really well supported here. So looking back at these U.S. equities, again, massive sell-off underway, and that trickle effect goes into Bitcoin and the other cryptocurrencies. You got Bitcoin down about 5%. You got Ether down about 7%. If you're going to get involved with the cryptocurrencies, look at the February contract because there's not much time left on the January one. On the gold market, you're going to want to look at that April contract because of the fact that there's not a lot of time there. Now, looking at some critical levels here on the gold market and on the silver market, just opening up those levels, we've really flattened out on the gold market, which leaves the market susceptible to some kind of correction or a big breakout one way or the other. I believe that the data is really going to dictate it, but we'll take more of a defensive approach and look at adding put options, tightening up stops, or trimming and pairing off some positions here coming into this week's volatility. Now, getting to that silver market, we're hanging right at about this 50-day moving average, which is right around like the 30.98 level. We're sitting last on the silver market, 30.93. So trading on either side of it. The big sell-off we saw overnight was quickly bought back up, and we're sitting there hovering here. So what you want to look at is you want to look at Friday's close and Friday's extension range, because the close on Friday here was 31.18.5. If we can get above there, chances are it will retrace that entire candle going up to 31.68. Excuse me. You need to get a close over 31.87, and that's how you get the breakout up to 32.5 or 33. So if you guys got any questions, let me know. Give me a call, 312-858-7303. And remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.